what's up?
Let's quickly do your supplements for SLCM, old syllabus, and there are no much amendments and all, minor amendments only. Again, what the institute has done, institute has given all the amendments which has taken place in the last literally 3 years, and they have put everything in one book. So if do not have to panic, whatever is the new ones, we are going to decide it now. We'll be discussing now. Whatever are the old ones, please watch the previous amendments which is already been uploaded on YouTube. As I always say, at least watch 2 amendments before going for the exam. So at least watch these 2 before going for the exam. Clear of you? With that, let's start. What are the amendments, sir? So wherever there is blue is the one which you guys need to look out for. That's the amendments. That's what will be applicable for 2024. Clear of you? Yes? Okay. So promoter contribution in case of IPO. Now what is that, people? If you remember, in our ICDR we had seen that once a IPO is done, a promoter needs to hold a minimum of 20% of shares at least for a period of 18 months. If you remember this amendment. If a promoter is not able to hold in his place, who else can hold? Alternative investment funds, foreign venture capital investors, or scheduled commercial banks, or PFIs. In their place, people, in the place of promoter, they could invest. If you remember, we had this in our syllabus. This is not an amendment. Now, in place of promoter, who else could hold? There were already a big list. I mean, 3 people were there. Now, to that, they have added one more also. Who is that? Any non-individual public shareholder. Non-individual public shareholder, meaning I'm speaking about an institution which is already holding at least 5% of the post-issue capital, or any entity, whether individual or non-individual, forming part of promoter group other than the promoter. Meaning what, sir? Imagine, people, there is a mutual fund who is, let us imagine, is not coming here, who is already holding 5% there. Now they are telling whatever they are holding can also be taken equivalent to the promoter contribution. It can be taken as a substitute, or whether an individual or a non-individual. If at all you are a part of the promoter group, you are related to the promoter group, but you are not a promoter here. Even you can also hold on behalf of the promoter. It will still be considered towards the promoter contribution. So these 2 names they have added new. That's the amendment. And whatever the lock-in requirements of 18 months are, will be applicable to these people also. That's the further amendments. Same thing will apply to SME as well. For companies which are listed on SME stock exchange also, same thing will apply. Yes, sir. Lock-in period of 18 months. That's what was there. Lock-in. Minimum period of 18 months. Correct? Next one, period of subscription. If you remember, people, and IPO shall be open for at least for a period of 3 days, maximum for a period of 10 days. Imagine we said our offer period will be open for 3 days. If at all there is any force majeure clause, force majeure means, people, unforeseen events like an act of God, tsunami, something that happened. The offer period can be extended, people, at least by a minimum period of 1 working day. It is possible. So minimum 1 working day you can extend your offer period. Even though you have said it as 3 days in your offer, now you can extend it by 4 days. I mean, you can make your offer period as 4 days. It is possible. Clear? Simple. That's an amendment. Adjustments in pricing. I'll tell this when we are doing SAST. What is that? At once I'll tell you. It is applicable here also. When I'm telling that, you come and read here, but not relevant directly here. Promoter contribution in case of SME, same thing. They have added here also, as I told you. Lock-in applicable here also. Correct? In case of SME, what is the lock-in? 3 years. Same thing. 1 working day in the case of SME also. In case of force majeure clause. That's all. That's the amendment. The next one, sir. Okay. Guidelines for returning of draft offer document and its resubmission can be important. Recent amendment from exam point of view. Remember and go. Now, what is it, sir? Whenever a company people files their draft offer document with SEBI, now SEBI at times will return the document and ask the company to resubmit it with corrections. Now, this entire part was not clear, even though we have a specific chapter called as Schedule 6 of ICDR, which specifically speaks about that. But what exactly are the grounds? How, when will the SEBI will send you back the forms for return it, or when will it tell you to resubmit it? We were not clear. So, SEBI has now specifically issued one guidelines for returning and for resubmission. According to that, what does it say? When will SEBI return the draft offer document? The draft offer document, if it is not drafted in simple language and visual representation, meaning like a graph, data, all this has to be used. Next one, the information, if it is not in a clear, concise and a intelligible manner, meaning I am not able to read it and understand it, I will send it back. The draft offer document avoids complex presentations, vague, ambiguous, meaning I'm having all complex diagrams. Ambiguous meaning confusing. I will resend it. The risk factors are appropriately worded in simple, clear, meaning I've not given risk factors at all. I'm telling all good. You invest today 500 rupees, tomorrow it will become 1500 rupees. No risk at all. All that cannot happen, right? That is what they're telling. It has to clearly have those things. Next one, resubmission of draft offer document. Whenever they have sent it back to you, you need to correct it and send it back. You need to resubmit it, people, and you need not pay any fees again. But remember, if you do not resubmit it, whatever the fees you initially paid, that will not be refunded. The issuer within 2 days of resubmission of draft offer document shall make a public announcement, meaning I need to tell to the world, I had filed it. They asked me for changes, I have made changes also. I have to file a public announcement. Not only that, if at all I have any sectoral regulator, imagine I am an insurance company. I need to tell IRDA also, sir, this happened. I filed it, SEBI sent it back for some comments, I have given the clarification, all this happened, I am just intimating you. You need to do all this. Simple, huh? Yes, huh? Remember and go, they can ask you specifically these two. According to me, this is a very important thing that can be asked. Easy one also. Okay, next, where is the blue? Blue, where are you? Here you are. Okay, next one, sir. What is it? SEBI LODR. Applicability of SEBI LODR. Okay. Now, wherever people, we clearly say, right, you guys would have seen this particular thing is applicable to top 1000 listed companies, top 100 listed companies, top 500 listed companies. Now, the question is, how are we preparing this top 500, top 1000? When is it being prepared? Which specific day are we considering? For that, they have given something. What? They have given a task. SEBI has given a task to all the recognized stock exchanges. Let us imagine NSE, BSE. What is the task? All of you, every recognized stock exchange shall, at the end of the calendar year, what is the calendar year? 31st December. You need to prepare a list of entities, who stock exchanges. Let us imagine NSE has to prepare a list of companies that have listed their specified securities, ranking such entities on the basis of their average market capitalization. Meaning, let us imagine the number of shares into market price. As on end of 31st December, I need to do a rank, the first company, second company, who should do it? NSE will do it. I need to prepare this by 31st December. Clear? Yes, okay. The relevant provision shall then become applicable to a listed entity that is required to comply with such requirement for the first time, or if applicable, required to comply after any interim period, after a period of 3 months from December, or from the beginning of the immediate next financial year, whichever is later. Controversy. What is that, sir? 3 months from December 31st is when? April 1st only. or from the beginning of the immediate next financial year. What is the immediate next financial year on 31st December? Again, 1st April only, no? Why both are 1st April only? Why whichever is later is coming? Yeah. Remember, if you guys remember company law, you also have seen one thing. A company is free to choose any other year as its financial year. You need to file an application, NCLT's approvals and all required. You can follow a different financial year. That time, this down part will change. Clear? Yes, sir. So what they're telling you now, sir, by December 31st, NSC will prepare what is the top entities as per market capitalization. Now, based on that, now imagine if any rule is applicable for top 500 entities. Now, this will start following from 1st April or their beginning of the financial year or 3 months from December 31st, whichever is later. If their financial year is starting, let us imagine from June. So it is 1st April or June, whichever is later. So from 1st June, if you are coming under the top 500, then for you this rule is applicable. Now you guys can be thinking, sir, so is it applicable every year like this? Should we do every year? Every year you need to do. But once you came under this, once it is applicable to you, it continues to apply to you for 3 years. The list will be prepared every year. But next year also, let us imagine you do not come under top 500. Next year also you don't come. Next year to that also you don't come. So 3 years if you do not come, then people, this particular rule will not apply to you. Clear? Now this is the amendment. 3 consecutive years. Clear? Pakkana? That's all. Next one, people, risk management committee meetings. If you guys remember, the amendment here is, people, the gap between two meetings. Earlier it was 180 days, shall not be more than 180 days. Now they have increased it to 210 days. So if you remember the committees, in that there is something called as a risk management committee. In that meetings we would have written, the gap between two meetings should not be more than 180, you would have written, that has become now 210. Simple, that's all. Sir, whenever there is any vacancies in any KMP, people, it shall be filled it within 6 months, not later than that. Simple. If there is any vacancy in a company, it has to be filled within 6 months, is what they're telling. Okay, simple one. Sir, prior intimations, people, if you remember, whenever there are certain things that is discussed, you need to intimate about such board meetings to the stock exchange. Sir, in this board meeting, we are going to discuss about this matter. We are going to intimate it in prior. That is, before the board meeting only, we need to intimate it to the stock exchange. Sir, for that, there is a big list only, people. If you remember buyback, you remember financial results, all that was there. You need to intimate at least 2 working days prior. To that list, they have added one more thing also. What is that? Fundraising excluding security receipts, securitized debt instruments or money market instruments regulated by RBI. Meaning what, sir? Now imagine, people, there is one company, let us imagine a company called as, say for example, MRF. Now MRF wants to do a FPO, let us imagine. They want to raise a further public offer. Now in whichever board meeting they are going to discuss about this, at least 2 days in advance I need to tell that, sir, we are going to discuss in this board meeting about FPO. To whom, sir? To NSC. We have to disclose this, mandatory. But they're telling, imagine there are these companies called as asset reconstruction companies. What is asset reconstruction companies? Those companies which buy non-performing assets from banks. If banks has any NPA, loans, they will buy that and in return they will make them the payment. Where are they getting money from? They will raise the money from QIBs, qualified institutional buyers, by issuing one instrument called as security receipts. You guys would have seen this or studied in setting up also, little in EBCL also, about this asset reconstruction company. But you guys would have studied in detail in your setting up. So whenever it is following the security receipts or any money market instruments. What is money market instruments? Money market instrument means, people, something which is regulated by RBI. So if you are raising those instruments, then they are telling you, you need not intimate it to the stock exchange, not required. 2 days prior intimation is not required. This is the amendment. Simple, done. Sir, and next one, they have added one more to this list. Any alteration in the form or nature of any of its securities that are listed on stock exchange. Meaning what, sir? Imagine people, we had issued 9% debentures. Now we are going to make it 10%. Alteration in whichever board meeting you are going to discuss this 2 days prior, you need to give an intimation. New addition. Any alteration in the date on which the interest or debentures or bonds or redemption money is payable. Meaning what, sir? The money, the total interest or redemption amount of debentures is payable on, let us imagine, 1st of July every year. If at all you want to change this date and you're going to discuss this in a board meeting, you need to intimate 2 days in prior about this board meeting. That you are going to make changes in the date of payment of interest or redemption payments. Simple. That's all. That's the amendment. What is that, sir? Sir, if you remember, people, market rumor verification now. This will be part of June 24 amendment. Please watch, important. Sir, the effective date, from when is that applicable? Earlier, people, it was applicable from June 1st, 2024. Now that has been pushed to December 1st, 2024. That's all. Effective date of implementation has been pushed to December 1st, 2024. From amendments point of view, it is there, but from your exam point of view, technical it is not required. Because amendment only, but effective date of amendment has been pushed. So it is already part of your June 24 amendment, just see. Or else not that important. Okay, next, where is amendment? Search for blue. Our only thing we need is blue. Sir, now you guys can have doubt. Will you upload this for us to download? Yes, people, mitro. Ye sab aapke liye. Obviously, what will I do with this? I'll give it to you. You guys can download. I'll give a link for you to download it in the description. You guys can download. SAST, I told you. What is it, sir? If you remember, people, whenever I am buying a particular percentage of share, I need to make an open offer. An open offer, people, I need to calculate a price. It cannot be less than that price, which I give an open offer to the public to buy their shares. That is what you guys should have studied in SAST. This is what I told you in preferential also. Come and refer here. Now, what is this, sir? Open offer price and all. What are we discussing here, people? See here. Sir, now imagine, people, there might be some good news in the company. Imagine a good director is coming to the company and the company gave a public notice that we are welcoming a new director. And the share price obviously went up because it's a good news. Now, when I'm trying to take an average to arrive at the price to give an open offer, this one day movement is actually unfair. It went up because not of the company or the share, it went up because of the director. Same thing, imagine a person passed away. The company's share price went down. So, whenever there is this news, which the company, informs, and if there is a material price movement, whether upwards or downwards, when they are calculating this price, they can exclude that day. Whatever is that price movement, it can be up or down. They can exclude when they are calculating this price. That is what they have given here. The effect on the price of the equity share of the target company due to material price movement and confirmation of reported event or information may be excluded. Shimpala. Pakkana. That is, what is this? Done. Done. Where is the next one? Same thing, people. Same thing comes in buyback also. When you are offering a price for the public, buyback again, pricing regulations will come. Same thing. If there is a material movement, you can exclude that. Up and down. Clear? SAST thing, same thing will apply. All this buyback and all is very long, old regulations. Okay, this it was, we would have seen one case law only in class. What is that, sir? I'll tell you the reference of a case law. A and B company, they would be in some talks to get merged. Some discussions are going on. Some newspaper gets to know about it. They write in the newspaper, is it true? that A company wants to get merged with company B. From that day, it is there in the social medium or it's there in the newspaper that everyone is speaking about it. But has the company officially declared about it? The answer is no. So one day what happened? The directors purchased some shares in company A and company B. And SEBI filed a case on them saying that, sir, they have done insider trading because they have done a trade on these companies because there is a good news which is not available to the public. Now, what did the director say? No, sir, that's not true. This news is already there in the public domain. See, there are so many newspapers that have reported about it. Now, the question is, can I consider this news as a sensitive, unpublished, price sensitive information? The director is saying it is there now, sir, in the public domain. How come it is unpublished? It is there. So in this case law, it was decided that because it is already reported in so many papers, it is not considered as unpublished. It has to be treated as published only. But don't you think it's a loophole? People will be reporting 100 things. Now, do you know is it true or no? No. So remember, people, on those grounds, now they have said such whatever we are telling it as UPSI, you cannot say it is a published information as long as you are not clarified it or officially declared it. Someone is speculating something will not become a published information. That's what they are telling here. Shall not include unverified events or information reported in print or electronic media. It is unverified. Company has not commented about it at all. Now going forward, you cannot say it is already there in the public domain as long as you are verifying it because it forms part of your market rumors. Correct? Yes, simple, done. That's your amendment. And what else? What else? What else? See, in between here and there, they'll just drop it off. That's why I've marked everything in blue and come so that. One more. T plus 0. Okay, see here, people. India first was doing T plus 2 trade settlement. What is T plus 2? If I buy a share on Monday or if I sell a share on Monday, T plus 1. Monday is considered as transaction day. Plus 1 Tuesday. Plus 2 is Wednesday. On Wednesday, if I sell any shares on Monday, I used to get money on Tuesday. On Wednesday. This was the current cycle of SEBI, current cycle of Indian Stock Exchange, which was moved to T plus 1. If I sell a share on Monday, I will get money on Tuesday only. This is the current settlement cycle. Now, SEBI is trying out on a beta version. Beta version means people, they are testing it on top 25 selected stocks. Example is SBI, MRF and all, they are trying it out. What is that? They are trying T plus 0 people. So if you do your trade within this time, 9:15 to 1:30 p.m., if you do your trade within this time, then if I sell my shares on Monday, the money will be credited on Monday only. Just for your information to understand how beautiful this is, India was the first country to even formally follow T plus 1 settlement only. No other country even does T plus 1. India was the first country to achieve it. Now they are going towards T plus 0. In the top 25 scripts, they are already trying it out also. That's the amendment. That is this T plus 0, rolling settlement cycle. Clear? So it's going on optional basis. It's not at mandatory, it's going on optional basis. This is only for the top 25 companies, not for every company. They have selected 25 scripts. It's a beta version. Testing. Simple. Okay. Oh, that's all. That's all, well, nothing else. No other amendments are there. So simple amendments, nothing complicated at all. So know these and go. I'll also tell the team to upload this on your YouTube thing, so you can watch it, you can download it as well. Yes, people. So thank you so much. Wish you guys best of luck. Do well in your exams. If there's anything I can help you with, please do reach out. So thank you so much. See you all. Bye bye.